Hello, hello, hello. Welcome back to another review of the ICT 2024 mentorship trades that I have taken so far. This will be a review of January the 13th, where I made 15%, to be precisely 14.5% on my portfolio. So we went from an account size of 15k to 17k. You will be seeing the live executions afterwards. So if you don't believe me, you will have your proof. And yeah, let's just go over it on how did I take this trade or trades, and yeah, just review the day. So we know that this week actually we had PPI, CPI, and Monday was a non-trading day. So originally you might think that Monday would be a consolidation day so that it can be manipulated by PPI and CPI later on. But it actually gave us a lot of clean price action for some reason, and that gave us a great opportunity to trade. So let's see what we're working with on 9:30. So, well, not 9:30. Well, let's see what we're working with after first presentation is formed. So to start off, we have a discounted opening range gap of 253 handles. So we already have a gap size that's extremely large, meaning that for my strategy, I will actually be dividing the opening range gap to its midpoint and actually start taking profits on the quadrants of the lower half of the gap size of the opening range gap. Next to that, for this particular trade, I was only looking at the NDOC and NWOC bias with a daily liquidity bias. So I didn't look at the weekly, the pre-market, London. I was only looking at the NWOC and the daily bias, in which the NDOC and the NWOC bias gave us a bullish bias, meaning that the clustering of NDOCs and NWOCs was to the upside. So the draw on liquidity was to the upside, and the same counts for the daily liquidity bias. And you could have a look at that here actually. So we didn't have any daily liquidity left. These red lines are the daily liquidity, and we have one liquidity pool here with equal highs actually to the upside left. Meaning, where does price want to draw to? That price, right? Combine it with the clustering of gaps. That's our bias. It's easy as that. You don't have to complicate it. But all right. So we have first presentation formed. Interesting to see right here is that why is this gap drawn from that wick to that body? Well, if we zoom in and put our fibs on this, is that there's a small volume imbalance over here. And when there is a volume imbalance, you have to do a measurement to see if the wick of this candle surpasses 50%. If this wick would have surpassed 50%, like it would have been over here, so that the wick would have been like here, then you would have been drawing it like this. But when a wick surpasses consequent encroachment of a gap, you will not draw it. If it doesn't surpass it, it will stay in the bottom half or in the upper half. If it is this wick, then you will be drawing it entirely and incorporating it. All right, so first presentation formed. We are in a discounted price compared to the opening range gap. So that means that we are in heavy discount currently. We have a bullish bias, which means this is an amazing trading opportunity to try and see what the market can give us. So let's go. What we're currently waiting for is that price closes above the first presentation so that we can have a nice entry. We see that price gets extremely volatile here. So what do? We place an entry at the one tick above the first presentation and one tick below this candle over here. Let me, by the way, adjust that a little bit because that was not my actual stop loss. So wait, was it? Oh wait, never mind. It was. Excusez-moi. So, all right. Normally, when you place your stop loss below the fair value gap, you will use this candle's low. But because we have the volume balance included, we actually see this entire candle, these two candles as one candle, meaning that our stop loss will be put one tick below here. Hopefully that makes sense. I still have to wake up a little bit, so hence why I had to look twice. All right, so we place our entry and we get triggered in a few minutes after. So our TPs of 25, 50%, 75, 100%, and 125 take profits are placed. We go to break even at 25%. Once again, I'm going to repeat myself. Why is my 25% actually at the 12.5%? We have an enormous gap. So when that happens, price tends to stay actually in the lower half. ICT actually recently released a video in regards to trading the opening range gap in his 2025 lectures. Here he mentions this as well. And yeah, when you see that there's a larger gap, we tend to actually stay in that lower quarter size, and we would have to see if we actually want to go up, yes or no. And my adaptation to that is that I just divide the gap in two and use the lower portion as the original quadrants, basically. All right, so we are in the trade. We actually get to take profit relatively quickly, like it was only 7 minutes before we could go to break even. 9 minutes before we have 50%. And afterwards, we didn't quite reach for 75% and actually get taken out after. So, but we got stopped out at break-even stop loss. But the day doesn't end here actually, because there was still a lot of liquidity. What is this doing? Okay, there was actually still a lot of liquidity to the upside here. And you will see that we eventually create a little bit more liquidity here as well. So shortly after, what happens? So we got taken out, we go down, we go up. We have placed a limit order right now over here, and we see that price goes up, eventually takes out that 75% that we were originally targeting. And I have to be honest with you, I was a little bit annoyed over here, because we got taken out and price then goes to my profit objective, and I'm like, oh, why do you do this? But then I noticed the following. We didn't quite reach the consequent encroachment, the midpoint of the opening range gap. And we did like create a little bit more equal highs over here with this new high. So I was like, interesting. Our bias is still bullish. Nothing changed in that regard. So we will just keep our limit order over here. And you will see that around 12, we got actually tagged in. Not yet, not yet, not yet. We're creating a lot of liquidity. So something to notice here is that we actually created a small liquidity pool over here. And we take that liquidity pool out and we get tagged in at 11:58. So this is actually the lunch macro. And within the lunch macro, what most of the time happens is that we will take out a high or low that is formed after 10. So what is this? This is a swing low formed after 10. This is a swing high formed after 10. And, well, what does that mean? Swing low, swing high, one low is taken out, and we are currently in a trade. By the way, check how nicely this is respected. We didn't close below the first presentation. We remained in this part, which is very nice, and we had an extremely large, huge reaction from this actually. So we hit 25% extremely quickly again. I think a little bit longer than 7 minutes, like the first one. So 12 minutes, and we can go to break even. And shortly after, we hit 50%, 75%, and we are creating relatively equal highs right now. This is just a small pullback. It's all okay. And we take out those relatively equal highs. Full gap profit. And from here on, it's just price kept stagnating a little bit. So we eventually get to our 125. So all our contracts are sold. We still have one contract left. We have a runner left. And actually at this point, I started to have I was like fully out of my position. And I only had the runner left. And our price was at break even. So I just went for a nice walk with my girlfriend. And I let that runner run. And what happened? Well, price just kept moving up towards this new week opening gap that was of this week. This is this week's new week opening gap. And I closed my position at 1630. So now you might say, but MW, Jelle, this is your indicator, your strategy. Did you actually execute on it? Well, yes, I did. So as you can see, I'm logged in on AMP Live. Let's enable the executions and actually go out of the replay mode because otherwise you don't see it. And as you can see, here's that first buy of 7 contracts. We sold 2, we sold 1, and then we get stopped out, right? Same here, buy 7 contracts. I actually mispressed. I was managing this trade on my phone. And what happened here, why did I sell 2 contracts here? I actually mispressed the sell button. That's normally over here. Because I was trying to change the contract size from 1 to 2. So yeah, because I was trying to set limit orders on my mobile and I mispressed, so that happened. So that's why I sold 2 here accidentally, then bought 2 back pretty much instantly, as you can see. Actually, in a little bit more of a discount. And then we have our basic 25%, 50%, 75%, full gap closure, in this case midpoint of the original opening range gap, 125%, and then the end of day at 430. I was actually thinking about holding this overnight, but because my strategy is to close my trades at 430, this was the decision I made. If I had held it, well, it would have been a very nice trade, as you can see. But it is what it is. So this trade, I actually made 2270, so 2,217 US dollars. And the account size was 15K, so I made 14.5% on this day. And yeah, that was all she wrote. So if you've got any questions in regard to this review and how I actually looked at the price action, feel free to ask and I will try to answer your question as good as I can to the best of my abilities in comments. So thank you for watching and till next time.